Visa stock, ticker symbol V. Is this the best dividend growth stock to buy right now? I asked you guys if you were interested in a full analysis of Visa stock. 80% voted for a yes, so here we are. This stock is up 2% on the 1-year chart versus the S&P 500 being down almost 10%. So Visa had a better return in the past year. On the 26th of January, Visa reported earnings, where they beat on both EPS and revenue by a decent margin. The stock went up 3% because of the quarterly results. But does this also mean that Visa stock is a buy at current prices? Well, in this video I'm going to show you real quickly what Visa does. The most recent report, the fundamental analysis, dividends, returns versus the S&P 500 and its most important competitor, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Visa do? Visa Incorporated is a global digital payment technology company that serves individual and commercial clients, financial institutions, government entities, and merchants. It facilitates global e-commerce through digital payment and information. If we dive in the most recent earnings report, we see that net revenue is reported at 7.9 billion and is up 12% year over year. Net income is up 6% year over year. Earnings per share is up 8% year over year. The key business drivers were also up year over year. Payments volume increased 7% and cross-border volume increased a whopping 31%. Processed transactions also increased quite nice at 10%. What I think is very interesting to see is that the monthly processed transactions is growing again. During 2022, a lot of things happened in the world. People were spending less money in ratio, and that's also reflected in this graph. However, the good part is that in January we see an increase again, meaning people are going to spend more money in ratio, which comforts me quite a lot for the future. If we go back to the revenue again and check the revenue breakdown, we see that service revenue was at 3.5 billion and increased 10% year over year. Data processing revenue was at 3.8 billion and was the biggest segment. It grew 6% year over year. International was almost at 2.8 billion and grew 29% year over year, which is a good sign to me. Other revenue increased 31%, which is also very nice. For the upcoming earnings, 14 analysts expect a beat, while 9 analysts expect a miss. So there's quite a mixed feeling about the upcoming earnings. On the 27th of April, Visa will present their next quarterly results. And now that we know more about this company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Visa is a 487 billion market cap company, which makes them the largest digital payment company in the world. They also are one of the largest US companies. PE ratio is at 32, which could indicate that you pay a premium for this stock. Later in this video, I'll show you my 3 price targets for Visa, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 29 billion, and in this graph we see that revenue went up quite a lot in the past decade. During the lockdown periods, revenue decreased a bit, but right after things cooled down, revenue went back to all-time highs again. But the question is, will they continue to grow in the same way as they did in the past couple of years? Margins are going up over a longer period of time and are quite steady and consistent. This is also one of the main things I like about Visa. Profit margin is above 50%, which is an insane number. EPS is also going up pretty nice and steady, same way as the revenue. I do like this number quite a lot. Price to sale ratio is at almost 19 right now. It has increased quite a bit most recently and it's pretty high in general. However, companies like Visa do have a higher price to sale ratios in general as well. And it's the same story with the price to book ratio. Usually this number should be way lower, but with Visa I'm okay with it. Price to free cash flow is around 30 right now, which it has been for a long time. It also indicates that you pay a premium for the stock. The question is Visa worth the premium? Analysts expect EPS to increase in mid-double digits in the coming years, which is very nice of course. Revenue is expected to increase at low double digits in the coming years, and after that they expect revenue to grow at mid-single to low single digits, which is kinda surprising to me. Return on assets is sitting at almost 16%, which is above my 10% minimum, so this is something that I really like of course. It's the same story with the return on equity. And the most important number here, return on invested capital, is sitting at 24%, which is really nice, especially since it's above the 5-year average of 19%. To me, this number is so important for Visa. They really know how to invest their money at high returns. Current ratio is at 1.45, which is very nice since it's below the 1.5 mark that I prefer. So this looks quite good. Total debt is sitting at 20 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at 16 billion. They can almost pay down all their debt with the current cash, so this is something that I really like of course. However, it's still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And in this graph we see that free cash flow is going up quite steady, so again this is also something that I really like. Shares outstanding is going down in the long term, which I prefer normally, but you can argue about it for Visa, since you pay a premium for the stock, so if the company buys back its own shares at a premium price, that could mean that it may be not the smartest move. But to me it's very important that shares outstanding are decreasing, since it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyway, dividend yield is sitting at 0.78%, which is not that high to be honest. Annual payout is at $1.8 and payout ratio is at only 20%. I prefer 15% or lower, so right now they have roughly 80% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 18%, which is really high, and they grew the dividends for 14 years in a row. Overall, a decent looking dividend scorecard, but how about the historical returns? I decided to compare Visa stock with the overall market, in this case the S&P 500. Next to that I added MasterCard, which is their biggest competitor. We're looking at returns including dividends. On the 5-year chart we see that Visa returned a whopping 89%, which is very nice and also beaten the S&P 500, which returned 54%. MasterCard had the highest return with 125%. On the 1-year chart we see some different results. Visa had the highest return while the S&P 500 had a negative return. On the 6-month chart we see that Visa again had the highest return and easily beaten the S&P 500 again. On the 1-month chart we see again the same results. Visa had the highest return and easily beaten the S&P 500 again. So bottom line, Visa did beat the S&P 500 long term and its most important competitor MasterCard short term. But does this also mean that Visa stock is a buy? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 10 and 12%, since I think they will increase the revenue at the same level as they are doing it right now, and also based on the analysis expectations. Profit margin I'm filling in 50, 52 and 54%, and for the free cash flow margin I'm filling in 58, 60 and 62%. For the PE ratio and the price to free cash flow I'm filling in 19, 21 and 23, since this is a company that has a high moat. In my opinion, and I do think you should pay a small premium for this stock. However, you should not overpay for growth and moat. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Visa is at $231. I hit analyze and we see a few green numbers. We have a low price target of $148 to $172, which is quite a big drop. We have a mid-price target of $191 to $220, and we have a high price target of $246 to $282. To me, the mid to high price target is the most justified here. So that means $190 on the low side all the way up to $282 on the high side. But let's call it $200 to $280. meaning right now Visa is slightly undervalued based on the high assumption, but based on the mid assumption they are slightly overvalued. My final conclusion is that Visa is a high quality company. They have a big moat in my opinion and they are still capable of growing the business. They really know how to invest their money at high returns and they even pay a small dividend which is growing at high numbers. This also means that right now you pay a premium for the stock. The question is which number you think are justified for this company. Based on what I see, I still like Visa at current numbers. But before I increase my position, I would love to see the stock price to come down to $200. So for now, I will be waiting for the stock price to come down a little bit, and from there I'm going to increase my position. It's still one of my favorite stocks. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.